Our population is burgeoning, but we're not building enough accommodation. What's that mean for our housing markets moving forward? Well, in today's Property Insider chat, Dr. Andrew Wilson and I discuss the latest building approval data. And just because approvals are obtained for new apartments or houses doesn't mean they're getting built. We discuss the latest building cost data, and unfortunately building costs have risen so much that many new projects are just not viable. And we talk about other elements of our housing markets. If you want to keep up to date with what's happening in our property markets, please subscribe to this YouTube channel, click the little bell icon, and we'll keep you updated each time a new show comes out. Australia's population is growing rapidly, with ABS data suggesting our population grew by 563,000 people, or by about 2.2% in March 2023. Now, to put things in perspective, that's like adding another Canberra plus thousands and thousands more in just 1 year. Now, this growth mainly due to net immigration after our pandemic borders closed. In other words, many people, mainly students, arriving into Australia, and there isn't the usual exodus of students who finished their term here. Now, there's always a lag in this population data, and there are many indications that strong population growth has continued and even accelerated since the March quarter. And if the elevated net migration remains, growth in the 12 months to June, the last financial year, will be the largest ever on record. Based on this, overall growth could well clock north of 600,000 people at a pace growing at around 2.3%. Now, this surge in growth emphasises the urgent need for more homes to accommodate the growing population and improved infrastructure to enhance our quality of lives in the cities we live in. And that's why we're currently experiencing a housing and a rental crisis. So what's happening to new supply? That's what I want to ask Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market, as we look at the latest housing building approvals, as well as My Housing Market's building cost index. Hi, Andrew.
Yeah, good day, Michael. Certainly sobering statistics there. We're having this remarkable increase in the population through open borders, migration, particularly student migration. And as you mentioned, I mean, the net result is what we focus on, because we're getting probably the typical numbers we get, because we are a high migration country in terms of the inflows. But with students, we're not getting the outflows because, of course, students haven't been here for a couple of years. So they're not graduating, they're not going back home. So it's just a net positive, really, in terms of our gains. And where do they live? This is the question. And it's going to put a lot of stress on particularly those suburbs that are close or proximate to learning institutions. And that, of course, is inner city units. And that'll mean higher rents, of course. And we've already seen an explosion in inner city rents, in particularly Sydney and Melbourne and Brisbane, over the past year or two, because they came from a low base, because we didn't have that inflow through the COVID lockdown. So we've started to recover now, or we have recovered, but there's certainly a lot more upside to rents in terms of flood of migration we're getting at the moment. The other end of the pineapple is very uncomfortable because we're not building houses. I don't think governments talk about their targets anymore. The outlook for building is becoming worse, and not just because of the usual constraints of planning controls and red tape and green tape, but also we've still got very, very high building costs, which according to our data really is still way too high, particularly compared to the historical average of house building costs. And I think there are significant social changes that will occur as a result of our accommodation problems, with people just probably not leaving home, or more shared accommodation. And the other point is that we're not alone here, Michael, because most advanced economies are in the same position, with skyrocketing rents and a shortage of housing.
Now, we keep a regular track of building dwelling approvals, but developers aren't going to necessarily start these projects, even though approvals have been granted, until they're financially viable, Andrew. And that means we're going to need to see a significant rise in end values before we see any substantial increase in the number of new homes or apartments being built. But having said that, what do the latest dwelling approval figures show?
Well, it was a positive month, August, for home building approvals. They're up by 7%, which is a strong jump. Even though, as we've discussed regularly here, we just have to take that ABS data with a bit of a grain of salt post-COVID, because there are issues involved in their measurements. But the 7% rise followed a 7% fall over July. So really it was just up then down and down then up. And it was the unit market that sort of led the charge, and that tends to be quite volatile, as we also discussed, because you can get a large development coming through on any particular month, and that of course will pump up the results. Units were up 9.4%, houses were up 5.8%. Victoria recorded a sharp increase, up by 22.2%, again on the back of a sharp increase in unit approvals. But the big picture is that annual growth levels remain chronically depressed. When we look at the trend for national home building, it's still well below where it was a year ago. Of course, the only joy we had in terms of new supply was with the previous government's home builder policy in 2021, which was, of course, a stimulus package for the COVID issues. But it's creating probably more problems than it was supposed to solve, because that surge in demand couldn't be met by tradesmen or building materials. And we've seen this extraordinary increase in house building costs as a result, which is probably going to be here for the longer term, Michael, which, as you said, makes home building profitability questionable. And when we look at the figures, it was quite a good month in terms of the positives, but with total up by 7.1%, houses up 5.8% and units up 9.4%. But over the year to date, compared to the previous year, we're still well below, and the full year comparisons are well over double figure declines being recorded. We can't really hang our hat on the results over August, Michael. And the whole problem is that when we do get an approval, it's not necessarily going to become a commencement. We've got some data sets that show when we track commencements versus approvals in the same time period, that we're now starting to see the level of commencements falling below the level of approvals in terms of the historical comparison. This week, Michael, we'll get the latest data for commencements for the June quarter. It is a bit backward looking, but we'll add that to the model, the My Housing Market model, just to see if that's continuing, that trend that commencements aren't keeping up with the level of approvals. When we take those monthly capital city building approvals for units, we're actually 50% down on where we were at our peak in 2016. And again, it's just validating why we're having these problems. And capital city, Brisbane's the only capital city that's at least holding its own compared to the same period last year, even though it's down 1.6%. The other capital cities are all down by double figure. I guess good news, but not so good news. And Melbourne still remains the strongest performer for housing nationally. The big picture is not even close to even getting the targets, Michael. And even if we were hitting the targets, it's not about the approvals. It's about how many we're actually going to build. And unless building costs start to really ease, and I'm pessimistic about that, we're going to struggle to get houses out of the ground.
But the building costs are going to have to decrease, and that's unlikely. Your end value are going to have to increase. So what's been happening with building costs, Andrew?
Building costs were up again over August when we look at the My Housing Market House Building Cost Index, which we derive from ABS stats, and certainly they're well above where they were at the same time last year. When we look at the chart for building costs, it's just really, the index has gone through the roof since the home builder policy was introduced in 2021. And when we look at the annual rate of growth, and that's the key here, not just for the building industry, but for inflation too, Michael, because this works its way into inflation. After a sustained period of falling annual house building costs, we've actually now started to level out. At our peak, we were running at over 24% of annual growth in building costs. But of course, that was coming from the pre-COVID very low building costs regime that we typically have. But we're still tracking at 11.5%, Michael. We've got annual building costs still rising, which is the same as the previous month. In fact, it's a little higher than what we saw over June. So if anything, there's just a little bit of upward pressure on house building costs at the moment. What the problem is, these things become entrenched, that tradesmen, subcontractors, when they're pitching their prices, are now setting a 10% margin on everything because it's become entrenched. When we look at the historical level of annual house price growth, typically it was 1 or 2, 3% per annum. And that's what made Australian house building industry so competitive. And that's why builders could offer fixed term contracts, because there was a lot more surety in the price of their product going from year to year, the price of labour and the price of materials. Now looking like it's going to be fixed at around about that 10% plus rate, which, as we've said, makes it extremely problematic. Next week, we'll have a look at that data just to see how commencements are tracking with approvals.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options? We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, it's not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Well, we always talk about the auction markets because they're giving us a good in-time indicator of how buyers and sellers are feeling. We had quite a boom in auction results over the first part of the year. They've still got good results, Andrew, but they're slowing a little bit.
Yeah, but this is all pretty predictable, Michael. We've seen that not just with the auction clearance rates, which, as you said, is the auction market's a very accurate forward indicator of what's happening generally in our housing markets. And we had extraordinary results through late autumn and into early winter. We were averaging 80% in Sydney, which is a boom time result. And Melbourne started to push up towards 80% as well. But the other capitals also were producing very strong clearance rates. And it was all part of that catch-up energy from last year's subdued market conditions. But of course, now we see this anyway towards the end of the year, with higher stock numbers starting to provide buyers with more choices. And affordability is also impacting the market. We're going to see double-figure prices growth in a number of capital city markets this year. We've had 12 interest rate increases since last year. Of course, there's general issues about inflation. We've got the highest inflation we've had in decades. So all these things eventually act, even in a strong economy, act to restrict buyer activity. And of course, a lot of the pent-up demand from last year has been released, which was this year. So buyer demand has been satisfied to a large degree. So we are starting to see, and we see it in our price results, that although prices are still growing, they're not growing at the strong rates they were. This is just the natural part of an adjusting cycle. And we're seeing the same thing with auction clearance rates easing, still generally in favour of sellers. The Sydney market's probably still at the standout in terms of the big market activity. It recorded a 73% clearance rate. Melbourne's been really moving a little bit sideways over the last month or so. It had 860 auctions, 67.2% clearance rate. Brisbane down in both terms of numbers and the clearance rate. Adelaide was also down in terms of its clearance rate. Canberra a little higher, although its results have been a little flat and lower over the last month or so. So just that sort of sense, Michael, that clearance rates have certainly moved from their highs they recorded earlier in the year. But that is all about the consolidation of our housing markets. And they still remain generally in favour of sellers. But this is also some seasonal effects coming up with higher stock levels, as we always see when we move into the mid and later part of the spring selling season. So Sydney's trend so far this month is certainly above 70%, but below the strong results recorded earlier in the year. Similarly in Melbourne, just tracking a little bit above September at the moment. But of course, September was characterised by the distractions of the long weekends, particularly the AFL Grand Final distractions in Melbourne. Brisbane has fallen away over the month so far. Adelaide also lower, but Canberra a little bit higher. You can get those results every Saturday night, the snapshot results for the capital cities, at my LinkedIn account. And Michael produces the national auction report of a Sunday, which includes the regional breakdowns for Melbourne and Sydney.
Well, thank you for that explanation of what's going on. Look forward to catching up with you again next week to see what the latest data shows.
We'll have the latest labour market data as well, which will be released on Thursday. Look out for that one as well.
Catch up with you next week. Thank you, Andrew.
Thank you, Michael.